Hello there, I hope that you are doing well. Welcome to this new lecture. During this lecture I will be discussing the American rise, discussing the insane Nasdaq rally using time cycles and market maker models. I know that many traders have been caught off guard throughout the past few weeks by this huge repricing high which has occurred on the Nasdaq. However, during this lecture I will be explaining to you how this full run high was anticipated using time cycles and market maker model logic. Here we are on the daily chart of Nasdaq, and what I would like to see is that Nasdaq has risen more than 30% ever since the low which formed throughout the month of April. This is a huge run higher which has occurred, and I would like to discuss this delivery with you. The reason why I would like to discuss this delivery with you is because I know that many traders were not expecting such a huge run higher to occur. The reason being is because many people were trapped in the narrative which was established throughout the media. The narrative which got established throughout the media throughout the beginning of April was that the markets were dumping and that they were going to continue to dump forever. Everything was going to fall over was the narrative which was being told throughout the month of April when the markets were being repriced towards the downside heavily. The run lower was very violent and was a very sudden drop which occurred. However, what you can see is that after this swing low formed right here, the Nasdaq has risen more than 30% and has reached the yearly open. Now, what I would like to do is I would like to go over this delivery and I would like to combine both big political events, global news events, with the delivery using time cycles and market maker models logic. But before I add my lipstick to the charts, I would first want you to pause this lecture for a moment and I would like you to take a look at this chart. And I would like you to try and explain to yourself why the market has risen so much as it has. Now I know that many traders are probably looking at this chart and they're completely surprised. However, if you take the time to look at this delivery through the lens of everything which I've been teaching to you publicly so far this year, you should be able to see why the market has ran up higher the way that it did. I hope that you paused the lecture because I'm now going to add my lipstick to the charts. Here you can see my annotations on the chart, and I've annotated a lot, but don't worry, I'm going to walk you through each one of these annotations. First of all, what I would like you to pay attention to is the following. What you can see is that I've outlined the first quarter of 2025, which began in January and lasted until the end of March. Next to that, you can see that I've outlined the second quarter beginning at the 1st of April and lasting till the end of June. Now the reason why I've put these quarters on the chart is because when it comes to the time cycles logic, as I've outlined it to you prior throughout the past year, I would like you to understand that when it comes to yearly delivery, we pay attention to each quarter's delivery. Based upon how a previous quarter delivered, we can anticipate how the next quarter is likely going to deliver. If we fractalize this logic, we can also be paying attention to specific months. Meaning, as you can see, I've also divided the second quarter into 3 different months. Meaning, the month of April, the month of May, and the month of June, which is yet to come. Now, what we're going to be paying attention to is first of all what happened throughout this first quarter of 2025. What I would like to see is that when we began the year, we saw the market consolidate. Meaning, we saw the Nasdaq consolidate at first and slowly grind towards the upside. Then throughout the end of February, we saw the market begin repricing towards the downside. This repricing lower continued throughout the month of March. Notice, however, that throughout the end of March, we saw a retracement taking place. Then we saw the market expand towards the downside once again. Throughout this expansion lower, we saw this CB get created. This CB is important and we'll touch on that in a bit. However, what I would like to see is that when the low of March formed right here, we saw the market retrace. April opens up and the second quarter begins. Notice that I have outlined right here that on this day in particular, Liberation Day occurred, where Trump announced massive tariffs. Meaning, what Trump announced on this day in the beginning of April was that a lot of countries would receive tariffs by the US, and this caused for heavy repricing lower. That's at least how the media framed it. However, from a purely objective perspective, by looking at the charts, I would like you to understand that ever since the end of February, we were already in a sell program. Meaning, the markets were already bearish and they were primed to go lower. That Trump then announced these tariffs on all these countries whilst Nasdaq was trading inside of this daily CB, must be random, right? Notice that throughout the first week of April, we then saw the market reprice lower heavily. Notice that we eventually saw the market take out the previous cycle low, which is the previous quarter low right here, and eventually a swing low formed. We saw the market then reprice higher, and notice that the market spent some time inside of this candle right here. This candle is important because it is the previous quarter low. And as I've outlined prior throughout my time cycles lecture, throughout each new time cycle we pay attention to the PXL, the previous X low. Because we're now paying attention to quarters, we're paying attention to the full candle of this previous quarterly low. Notice that the market rejected that range multiple times, and then we saw the market drop lower one more time, and then on the 21st of April 2025, the smart money reversal was confirmed. Now, I understand that you might be looking at this date and you might be thinking to yourself, how is it possible that on the 21st of April 2025, you were confident that the low was in on the indices? And notice that this is not the absolute low. Now, I understand that many of you might be thinking to yourself, okay, you're probably looking at intermarket relationship, and that's correct. However, there was no SMT, meaning there was no cracking correlation between the Nasdaq, ES, or the Dow Jones. Meaning, I had to utilize a different set of markets to confirm that the SMR was in, the smart money reversal was in on the Nasdaq. And that's something which we'll touch on in a bit. However, what I would like to see is that after the smart money reversal was confirmed, we saw the market create this gap right here. Now, throughout this whole period, what was a very big narrative which was being pushed around in the world was that the US and China were having an extensive playoff on the global stage, so to say, where we saw that there were huge tariffs imposed on both countries. I believe the tariffs were as high as 145% or something. Whenever it comes to the narrative which was pushed around, I would like to understand that there's a reason why the media was paying so much attention to that trade war between the US and China. What I've been outlining over the course of these past couple of weeks within my weekly reviews and within my daily reviews, etc., was that I was anticipating that the whole US-China trade war was one big smokescreen. And the reason being was because I was seeing the signs that were confirming to me that we formed a swing low on the Nasdaq, and that would mean that we would likely see the Nasdaq rally higher soon. So what I was monitoring was intensively how that situation between the US and China would develop, but I was anticipating that the tariffs would eventually decrease in terms of significance or maybe be completely removed. And the reason why was because the chart was already signaling to us that we were in a buy program after the 21st of April 2025. So notice that we saw this gap getting created right here, and we saw the market retrace into that gap, and we then saw it expand towards the upside. Notice that the market traded above the red shaded box of this previous quarter low, and notice that we formed this very tiny inefficiency. Now, what I was monitoring over the course of these past couple of weeks was this specific daily CB. And the reason why this daily CB was so important was due to the fact that we saw the Liberation Day, that day that set off that huge repricing lower, if you remember, we saw that originate from that daily CB. Next to that, we saw a high form inside of that daily CB. Therefore, this high is a very important high to monitor. But when we pay attention to the time cycles logic in general, what I would like you to see is that we open up the new month of May. What happened? Notice that the market immediately took out this high. This high was the April high. And as I've outlined to you, when it comes to continuation algorithms being in control, what we must see is we must see the previous XH, in this case the previous month's high, function as support to confirm continuation higher. What we saw taking place was that the market retraced into that April high, this candle, but also into this CB, after we displaced above it with this large upclose candle. Notice, however, that when we repriced above that high, we saw a very tiny inefficiency form. And this right here is the market structure shift pattern. The market structure shift pattern is the strongest algorithmic signature which you can look for to confirm market reversals. Therefore, whenever you see the market structure shift pattern, where you see a CB high BC form inside of the range of that CB and inside of the range of that high, that's a very crucial algorithmic signature because that signals to you that we change from sell to buy program. It was already confirmed that we were in the buy program down here. However, when we saw the market trade above this April high, that's when it was really confirmed that the Nasdaq would likely rally towards the yearly open, which was my first objective. Now, what I would like to see is that we saw the market retrace into the range of that CB, which I'm now using as an inversion for value gap, and notice that we dropped below the monthly open. Notice that the market also traded into this very tiny inefficiency, and notice how the market respects it beautifully right here. Now, isn't it interesting that this day right here was the day of FOMC? A crucial news event right here formed the current low of May. And isn't it interesting that after this news event we saw the market expand higher? And what came out in the weekend after? In the weekend after, it was announced that the US and China came to a trade deal agreement after meetings took place in Switzerland. Isn't it interesting how the chart was already telling to us that we would likely see the Nasdaq expand towards the upside, and how all of a sudden, must be random, right, that the whole global stage seems to change. What I would like you to understand is that these news headlines can be anticipated. Meaning, we can look at a chart and we can already anticipate what's going to be the headlines as they're going to be shared within the papers or within social media, etc. My private mentorship students knew that I was outlining this whole analysis from the get-go, where I was outlining that after this huge drop lower, it was only a matter of time before a swing low would form. And on the 21st of April, that got confirmed. Notice that we saw that US-China trade deal be established, and we saw the market then expand towards the upside, reaching the yearly open. Now, moving forward, what I will be monitoring for Nasdaq is the reaction to this yearly open. Because the month of May has expanded higher so significantly and we have reached the first objective of the yearly open, I wouldn't be surprised to see some form of consolidation or maybe even a retracement occurring. However, the moment that Nasdaq displaces through this yearly open, then to me, these daily CBs come to mind as a draw on liquidity, and the previous quarter high comes to mind as a draw on liquidity as well. And what's important to note is that this previous quarter high is in very close proximity to the 2024 high, the previous year's high. Now, what I would like to see is that when it comes to the delivery which has occurred, you can see that we purged the previous quarter low, failed to utilize it as resistance price, and from there on we saw the market expand into a premium of the range of the current year, from this high to this low, and we reached the yearly open. So moving forward, if we are going to see Nasdaq manage to displace above that yearly open, then the quarterly purge and revert would be completed the moment that we trade above the previous quarter high. Now, keep in mind that it doesn't need to trade above the previous quarter high in order for there to be profitable trading opportunities. Because over the course of these past couple of weeks, there were tremendous buying opportunities intra-week, but also on swing positions. Meaning, every single US stock which is major enough and is listed on the Nasdaq rose. Meaning, the majority of the US stocks all expanded towards the upside, providing massive returns within a relatively short period of time. Now, for intra-week traders, for intraday traders as well, this means that whenever we're in a trending environment, we look for one thing: market maker buy model up on market maker buy model up on market maker buy model. So when the higher time frame institutional order flow is this clear, we do not look for market maker sell models. Now instead we purely look to align ourselves with the higher time frame order flow, and therefore the higher time frame order flow was bullish. So that means that throughout the weeks we were looking for market maker buy models until this yearly open was reached, which was objective number 1. Here we can see 4 different stocks. And these stocks, which you can see in front of you, are part of the Magnificent 7. The Magnificent 7 are 7 of the most influential US companies which are listed. And what I would like to see is that I have the Microsoft chart, the Amazon chart, the Meta chart, and the Google chart in front of you. Now, I could have put all the 7 different charts on the screen, however, that would be too much. And the reason being is because 6 out of the 7 stocks all did the same, but there was one outlier. And it was exactly that outlier which confirmed to me that we would likely see the markets expand towards the upside very heavily. And you might be thinking to yourself, but Zeus, why are you looking at individual stocks to confirm the direction of the Nasdaq? Well, what I would like you to understand is that since these companies are so influential, what we can use is we can use these companies to already anticipate direction for the Nasdaq, since these companies are all part of the Nasdaq. What I would like you to see is that when we pay attention to these charts and we pay attention to specifically the lows, there was something present. So what I would like you to do is I would like you to pause this lecture once again, and I would like you to investigate what you can see on these lows. Now, don't waste this opportunity to learn. Don't just, skip through this lecture and think, yeah, I'll just watch it. I'll wait for him to share with me why these markets expanded higher the way that they did. Nope. Actually pause it and investigate. I hope that you paused the lecture because I'm now going to show to you what was present. When we pay attention to the lows of these 4 different stocks, what I would like to see is that on these 4 different stocks, there was one outlier. The outlier was Meta. The reason being is because what you can see is that Microsoft created a higher low throughout the month of April. Amazon created a higher low. Meta, however, created a lower low, whilst Google also created a higher low. Meta was the outlier which confirmed the buy program across these different stocks. And when you pay attention to the run higher which occurred across these stocks, you can see how massive the returns have been on these different stocks. Now, what I would like you to see is that this is how you can anticipate quarterly shifts. Meaning, by paying attention to intermarket relationship across a variety of instruments, so not only Nasdaq ES Dow, we can also be paying attention to these bigger stocks and using intermarket relationship on them to confirm that we're in fact going to see the markets turn around. And when you pay attention to SMT, SMT stands for Smart Money Time. So in the midst of all of the chaos of the trade wars, what you can see was that smart money was fulfilling their long orders. And isn't it interesting to think about the fact that over the course of the past month, there were many earnings which were released? It's almost as if smart money knew that all these companies would heavily beat their earnings. Think about it, yes? Do you really think that these bigger entities do not know what's going to be reported over the course of an earnings report? They already know in advance what's going to be there in the earnings report. That's how rigged it is. And that's what you're seeing right in front of you on the charts. And once you start to understand that perspective, which I'm outlining to you, which is purely based around time and price, I promise that you will never look at these markets through the same lens again. And this is how you can see mega trades unfolding right in front of you. And when you think about the countless opportunities which present itself over the course of these past few weeks, whilst everyone was fearful, whilst everyone was in doubt, you can see that smart money was positioning themselves long. And Meta was the sign, because Meta created a weekly SMT with Amazon, Microsoft, Google, and other companies of the Mag 7, of the Magnificent 7. Now, when it comes to what I'm outlining to you right here in front of you, it's important to note that when we take it one step deeper and we pay attention to the fear which was induced into the world throughout the beginning of April, what we saw was that the headlines were screaming market crashes. They were screaming that the dump is going to continue. They were screaming America was going to enter a recession, etc. I'm sure that you have seen the headlines over the past month. However, what I would like to think about is what has occurred over the course of these past couple of weeks, where all of a sudden, all of the headlines in the media, the narrative across social media, all flipped very bullish very quickly. After the markets were going sideways for a bit. Why are they going sideways? Because smart money is fulfilling their orders. Who is in control of the media? Who's in control of the spread of information? Think. And there are certain topics which I simply cannot discuss here within a public lecture. And the reason why is because this lecture will either be delisted or my channel is going to get shadow banned, whatever tricks they might pull. But I want you to simply think about the question which I just asked you. Who is in control of the spread of information? And once you start linking that to this technical understanding, which I'm outlining to you based upon time and price, you will see exactly what smart money is doing. And they were all filling long positions. And when you look at these stocks, you must understand that they have risen massively within such a short period of time. This is what a low resistance liquidity run looks like. Now, when we pay attention to the hourly chart of Nasdaq then, what I would like you to see is that ever since the 21st of April, this day right here, the market has been doing one thing. It has been expanding towards the upside. This is not to say that there weren't any retracements, because there are always retracements. However, it's exactly in these retracements that market maker buy model opportunities are being presented. So what I would invite you to do is I would invite you to go into the charts and investigate the delivery which occurred over these past couple of weeks. And I would like you to investigate where all of the market maker buy model opportunities present itself. Look at this as a sort of homework assignment. Look at this as a sort of investigation which you can do on your own. And I promise to you that if you're going to look deeply into the delivery which occurred over these past couple of weeks, you are going to see the following schematic again and again and again of a market maker buy model. When you blend this with the time cycles logic of paying attention to weekly cycles, daily cycles, but also session cycles, 90-minute cycles, 30-minute cycles, and 10-minute cycles. And I know I just said a lot. If you don't understand time cycles yet, just go on my YouTube channel and search for time cycles lectures, because I've discussed this topic in depth. If you are going to go into the charts and investigate over the course of these past 3 weeks, all the market maker buy model opportunities which present itself, paired with the time cycles logic, your mouth is going to fall open. And it's literally hidden in plain sight. So I hope that this lecture has given you some insight on why the markets have risen the way that they have done. It has been an insane rally on the Nasdaq, and there were massive opportunities which occurred and which presented itself. I want to thank you for watching this lecture all the way to the end. I hope that you found it insightful, and I hope that you've gotten a great deal of insight when it comes to understanding how these bigger price swings can be anticipated. I want to wish you good luck in your studies, and I look forward to speaking to you in the next lecture. Be safe.